Good morning. You're all welcome to today's market snapshot. I hope you're all doing great today, and I hope the markets are pleasant so far this week. Quite an eventful week. Lots has been happening in the market, especially since we are coming from the weekend. You must have heard what happened with the Israel-Hamas crisis, which of course, was kind of has been downplayed a bit, if I'm to put it like that, by the markets. We are seeing that there's still quite a bit of risk on sentiment with what we are seeing with the market. We are also seeing that the Fed, the lot of comments that are coming from the Fed is that they want to kind of twist the narrative to give us sort of like an indication that we shouldn't fear what has been happening with the high interest rates, treasury yields over in the US. So I think by far and large, we are seeing a lot of recovery on most of the risk on assets. We have seen that happening on gold. We have seen that happening on the G10 currency pairs like the euro dollar, like the pound dollar. We are seeing quite a bit of development really in that area. I hope you're all doing great. So let's start. Yeah. So before I really dive into this, just to quickly see that there's really just a shift in sentiment. You all know that from the previous week, we saw a lot of selling intensity on the US indices, on the euro indices. We also saw the same on gold. We saw the same happening on assets like the JPY pairs, and that was majorly because the markets were experiencing what we can call an interest rate shock. Okay, there was an interest rate shock over in the US, and there seems to be some calm. Okay, there seems to be some calm. This is actually quite interesting that the calm is actually there despite what we are seeing with Israel and Hamas, likely because the market has downplayed the impact of that, and they're expecting that since this is not a new kind of conflict, then it means that it simply means that then we shouldn't expect to see that much impact on the various markets. So this is the fear index, and as you can see, the fear index had a spike that was from the US interest rate shock. But since we had the spike, we are seeing that now the fear index have now spiked lower, okay? And it's now trending at around 16.98. Now, this is just a clear indication to us that there actually isn't that much fear in the market, and that could explain why we are seeing a lot of buying happening on the US indices. We are seeing that there has also been some sort of recovery on gold. There's also been some sort of recovery on the JPY pairs, and we can also see the same for the G10 currency pairs like Euro USD, Pound Dollar, and also the NZ Dollar. And I would say also a bit of recovery also on BTC USD. So that's what we are seeing right now. Now, the other thing, of course, is that the Fed speakers have been quite many since the week began. And that has simply been because they have just tried to calm the sentiment and try to calm the markets since we had a lot of shock from last week and also from the FOMC meeting that we had happening. That was towards the end of September. So on the diet for today, and of course what we have to look out for today, keep in mind that the earnings season is upon us. Most of the stocks are going to start reporting their earnings within the next 3 weeks. For this week, we have on Friday, that's when you're going to be with Samsung, but we have earnings coming out for the big banks in the US. So we have JP Morgan lined up, we have Wells Fargo, we have BlackRock, we have Citigroup, we have PNC Financial. And then the week following that, we'll also have some other stocks reporting. That is a Bank of America, Goldman Sachs. So the recovery that we are seeing on indices and also, of course, on NASDAQ has largely been because of the earnings season. Okay, so if you're trading US indices, put this on your radar. You need to keep monitoring that because it's definitely going to impact what you're trading. So I also want to quickly go to the CME Fed Watch tool just to give you an update there and to tell you that the markets are pricing a potential hold of the current target range for the Fed at 5.25 to 5.5%. So that holding of the target range between that area could be an indication why we are seeing some selling coming in for the DXY. And the pause also on treasury yields should not excite traders as well as investors, simply because it's just taking a bit of a breather. Okay, the rates are going to stay high for longer. What the Fed is trying to do, and of course how it's trying to twist the narrative and the sentiment, is to just guide traders to get used and investors to get used to rates being at the levels they're at. Okay, so as we go into the rest of October, and also as we also get into this last quarter that we are in of the year, of October, November, December, we're expecting that the Fed will not hike in November. And this could provide some kind of dampening of bullish sentiment for the DXY, but we are going to just keep observing and see. So having said that, I also want to quickly go to the calendar for today so that we can handle the business for today. So for today, we had some CPI coming out from Germany. What we have been seeing is that there seems to be some kind of improvement of economic data. We had the IMF and World Bank meetings. They're happening in Marrakesh, Morocco. And what we are seeing with that is their forecasts are out, but the general comments from IMF is that we're expecting to see lower economic growth coming in most of these economies, especially as we go into 2024. And they have also indicated that the China slowdown is something of that they're observing, and it's something which they're trying to see how that can play out over the next few months. But we are seeing generally a weakness in the euro, and this German CPI again hasn't come as much of good news for the euro. That's why we are seeing a bit of selling coming in for the euro dollar. And the other thing that I'm also observing is that the CPI seems to be decelerating a bit quickly, which again could hint to some sort of stagflation, but we have to just keep observing and see how the market prices that in. But for now, the euro has come under some selling because of that. Later in the day, we have some data coming out for the Chinese yuan. The Chinese yuan is also going to have some impact from data coming out on Friday, which again could also feed into, if you're trading the New Zealand dollar and the Australia dollar, there definitely be some kind of impact there for most of you to trade. Now, I want to fix my focus on the PPI. Now, this week we have US CPI, and US CPI is going to come out on Thursday. So US CPI is expected to decline on all fronts. Headline is expected to come in lower. Core is also expected to come in lower. However, the headline month over month is expected to come in at 0.3%. Previously, it was at 0.3%. So inflation is actually expected to decline. So currently, fundamentally on the sentiment, what we are seeing is there seems to be some USD bearishness, okay? The thing that is quite, though, interesting is that the NFP numbers we got on Friday had a different response on the market. The NFP numbers came in much stronger than expected, but we saw the dollar having some deceleration or a bit of selling, which came as a bit of surprise to traders. And now that we're expecting CPI to decrease, and we are also expecting the PPI to come in relatively lower, that could then indicate that we could see some bit of DXY weakness as we go along. So for now, even as we go into PPI, if we get lower PPI readings, especially for this month over month number, then we can expect to see some bit of subdued dollar strength, and we could expect most of the risk on assets like the euro, like gold, to undergo a bit of buying. So we have the PPI today, and the PPI is preceding the CPI, which is going to come out tomorrow. So we have to keep observing and see. But the pre-CPI trade seems to be a bit of a dollar bearish one, and we are seeing that playing out on the various different assets. So later today, we also have some Fed speakers. The Fed speakers that we have had from last week, and most of them have essentially been pointing to some dovishness. They are saying that the rates should not scare consumers, should not scare investors, and that they are just really trying to fix the sentiment or the narrative to allow there to be some kind of calm. Okay, just like if you recall when we had the COVID crisis or the COVID pandemic, what was happening during that time is most of the different, players were indicating to you that COVID is going to be the new normal. Okay, so high interest rates in the US is definitely pointing towards some sort of new normal, and they want to keep the rates there so that they can make it a new normal. So for the FOMC meeting minutes, we will not expect that much reaction from the market, simply because most of what is going to come from those meeting minutes has already been mentioned by the plethora of the various speakers that we have been having for the Fed. So we have Bostic, who is going to speak at 7:15. But if we continue to get comments from these speakers that providing a bit of dovishness, then we can expect to potentially see some sort of weakness for the dollar. So if I'm to just go to financial juice here, you'll be able to see that most of the speakers we have been having have actually been, kind of dampening sentiment to allow the dollar to decelerate. So we have Fed's Kashkari, who said, but if higher longer term yields are higher because of expectation about Fed actions. Now I want to speak about the high yields we are seeing in the US. So now what that means is previously, what the markets were expecting was that for rates, for the yields to be high in the US, it could point to a credit event. But most of the speakers we have been having from the Fed have been indicating that the yields actually point to economic growth. Okay, so when the Fed speaker says that higher yields in the US point to economic growth, and then again you also have NFP numbers, being high as they are. We had a very strong jobs numbers from the month of September. That is a simple indication that then we can expect to see some strength for the indices, and it doesn't come as a surprise that we are seeing the dollar pulling back a little bit, and we are seeing some strength, especially for the Dow and the NASDAQ, but also for the risk on assets like the pound dollar and the euro dollar. So having said that, since we're having a lot of comments coming in from the Fed speakers that are pointing to some kind of stability and trying to kind of like dampen sentiment in the market to allow for most of the risk on assets to recover, that will then again not really provide the dollar that much strength even as we go into the FOMC meeting minutes. But in addition to that, since we're getting lots of guidance with the Fed speakers, the market most probably may not react that much from the meeting minutes. In case we don't get anything new there, then definitely it might not be some kind of like focus for us. Okay, so that's what you can expect from this. So without wasting time, if you have any questions regarding what I've gone through, kindly type in your questions. It's regarding sentiment, it's regarding any fundamentals of any kind. Type them in a comment section and I will be happy to handle them after we are through the snapshot. So we're going to quickly go to the charts and see what we have. I'm going to start with the pound dollar. So the pound dollar, we have been seeing a lot of liquidity sweeps, and even from last week when we had the NFP, we saw that there was some strong recovery coming on the front for the risk on assets, and we are also seeing that the pound seems to also be pointing to a stronger uptrend, and this is because we have a very nice crossover that happened around here. It happened actually on Monday when we had a public holiday here in Uganda. And that is really pointing to some strength for the pound. However, what we are seeing is the pound dollar seems to be forming some kind of ascending wedge, okay? It's forming a sort of an ascending wedge there. However, despite forming the ascending wedge, we do not have any liquidity sweeps on the upper higher highs. The sweeps are only appearing on the bottom levels, which is a simple indication that the market could actually be pricing in some kind of short-term strength for the pound, especially since the DXY has taken a breather. We could expect that the pound is going to continue moving within this area here. And as we continue here, it's likely that we could get the pound bouncing within this level, and it could continue within this area here. Now, for it to break anywhere here, whether here or here, it's majorly going to depend on two events. The first one is the PPI, which we are getting today. The second one is going to be Thursday's CPI. So there are quite a number of catalysts which are most probably going to feed into the price for the pound. And it's really going through some kind of price discovery. Still not sure of where it's going to go, but we can expect it to keep ranging within here. Now, if we get a break below this ascending wedge, this is potentially going to be a very nice setup for a sell, which could take it, selling all the way back to this area here. Most of the banks are still bearish on the pound, and that's because the economic data has not really given them any sort of indication of the pound moving higher. And we can expect that also, if you go on the higher time frames, it's not a surprise. It shouldn't come as a surprise that the moving averages or every single momentum tool is still pointing to some sort of downtrend. Okay, so if you check on the daily, again, if you check on the H4, you'll be able to see that our bigger period moving average is still a bit far, okay, from the shorter period moving averages, which is a simple indication that you can expect the pound to undergo some bit of selling. Okay, now keep in mind that from the peak that we had on the 14th of July, you can see that the pound is down roughly 8%. But if you go and check how far it's done year to date, you can see that the pound is actually still in the positive territory, which is also a clear indication to us that you can expect some kind of rallying coming in for the pound. Now, if you go on, if you zoom in a little bit more, you will see that the kind of price action we are getting for the pound dollar is very strong bullish price action, which is an indication that for now we could see the pound continuing to move within this area here. Crossing over to the NASDAQ, most of you who were able to attend our Zoom classes in the mornings, the virtual classes, we pointed that the NASDAQ is in a bullish year. So every single sweep we've been getting for the NASDAQ has been swept upwards, and that's simply because people are still piling up in the tech stocks. Some of the tech stocks are going to start reporting their earnings as soon as next week, and that is going to allow NASDAQ to undergo some serious buying intensity. Okay, where you see this tick right here, that is where we had a crossover, and that was very recent. So NASDAQ had a lot of buying potential from this area here, and even now we can expect NASDAQ to undergo some buying, which could take it back to this key area of the buy side liquidity, which is somewhere up here. So that is really going to depend on what you get with CPI, but it's going to be very easy for NASDAQ to break above here. If it manages to sustain a break above this area of supply, then definitely it's going to now aim for this. Okay, but the two catalysts for NASDAQ to reach here, one of them is majorly going to be the CPI. So if we get lower CPI numbers, it's going to be very easy for NASDAQ to reach within this area here, and it will attempt to create a double top when it reaches here. So if it creates a double top here, then NASDAQ could have an intraday. It could create some kind of exit liquidity point, which can now stay as the high, especially as we go into the rest of the quarter. So I just want to zoom out a little bit here so that you can see the kind of levels that NASDAQ has to reach. So this one is our first point of exit liquidity. Then this one is our second point of exit liquidity. So this is where we can expect the players to get into some bit of selling for NASDAQ. So this one right here is where we can expect NASDAQ to get into, okay? Most of the FANG stocks, NVIDIA, Meta, Google are at 50-week highs. And that is a simple indication that this particular index is still undergoing very strong, intense buying, okay? So we can expect there to be some intense buying as we go along for NASDAQ. So crossing over to the Dow, the Dow created a double top, that was rather a double bottom from the NFP, and it had a very nice sweep, especially when the US market opened. And we're expecting that from that point, we are going to see some strong buying intensity. There has not been that much impact from the crisis that we had from the Israeli-Hamas conflict, and that is simply because there are no key resources that pass through that Gaza Strip. And those, of course, key resources would usually dampen bullish sentiment here. Now, the other thing that you also have to keep in mind is the market is forward-looking. So if you have CPI expected to decline and PPI also expected to come in lower, most of the traders and investors will get into buys, potentially looking at it moving higher. So as of now, Dow is undergoing very strong, intense buying, very impulsive buying, simply because there's the VIX, which is the fear index, was down actually about 4% yesterday. And that means that most of the players are actually looking for longs on the Dow. Keep in mind, however, on the big picture, the Dow is still on a downtrend. So the Dow could attempt to have some buying intensity, especially from PPI, which could potentially take it back to this area here. Now, if we get higher CPI, then it's going to attempt to create another new high. Now, that high is going to come sometime, if not on Friday, most probably sometime next week. So it could be somewhere around here. So it will create it potentially somewhere around here. Now, if it attempts to get to that area, then definitely we can expect that we will see the Dow undergoing some intense selling from that area. So it could be somewhere around here, along these levels here where we had that last exit liquidity zone, or it could be somewhere closer here, okay? Now, if we get a lower CPI reading on Thursday, most probably we are going to have the Dow reaching all the way here. Now, in case it doesn't, then definitely it's going to have some selling, which could again break below this ascending trend line all the way back here. Now, we also have the banks expected to release earnings. If those banks release positive earnings, then definitely you're going to see some serious rallying coming in for the Dow. The last time we had earnings, which were the earnings for Q2, the Dow underwent a lot of buying. If you go on the higher time frames, you'll be able to observe this. So you can see this area here that was around June. We saw buying that came in for the Dow, and this buying that came in was because of the earnings. So if these earnings are positive this same quarter, the Dow is going to recover and still undergo some buying. Keep in mind that part of the reason why we saw that rally from May to July on the Dow, if you recall, was simply because there was a lot of positivity from the earnings, okay? So the earnings could dampen bearishness and could allow the bullish sentiment to take over. So crossing over to gold, as we finalize, gold, we expected it yesterday to break above this descending trend line, which of course it did. And it is now trying to attempt to create higher points, which could take it back to this area here, which was the last supply zone. And we saw that area around the 17th of August. So in case gold attempts to reach back there, then definitely we can see it potentially selling back. But one of the things I need to mention on gold is that the open interest on gold futures has been pointing to a bearish sentiment for gold. But also one of the other reasons why we saw gold selling a lot was simply because of the net outflows. So there were net outflows coming out for gold on the ETFs, and that I got that data from the World Gold Council, and I wrote about it on Twitter, so you can check it out there. We are seeing that there are a lot of outflows coming out for gold, and that's the reason why we saw gold having a lot of selling, especially the one that we saw coming out last week. Okay, the only reason that saved gold from breaking below this area here was simply because there was capitulation. Okay, so capitulation happens when you find that despite sentiment being bearish, if there's not enough supply to help it break below this level, then it won't break. And simply because of that, everyone will switch to buys, and that's what we're able to see. The gap that we saw on gold was simply because of the Israel-Hamas conflict. And of course, gold being a safe haven asset, definitely it would undergo that kind of gapping. Okay, but for now, expect gold to attempt a recovery. But this recovery, the highest it can get to is where you're seeing that key supply area, which we last saw somewhere around here. Okay, so the moment we test this level again, like we tested it, then gold could potentially retest and then break lower. So what you can expect from CPI is we could attempt to have a move here, which again could send gold selling back to this area here. Now, keep in mind that the uptrend for gold is really, I would say, very limited. Okay, simply because the US 10-year and the bond yields in the US are actually providing better interest than gold. Last month, gold was down about 6%, and the US 10-year was up about 13%. So if, well, even looking at it in terms of interest, the interest on gold is I wouldn't say it's bearing that much interest if you're to hold on to it, and that's why investors are switching more to assets like the bond yields in the US and some of these other assets that we are seeing. So I think with that, I can now cross over to handle your questions and see what we are seeing with that. So let's quickly just handle. I just want to see your questions and see what you're asking. Okay, so let's see what we are seeing here. Mwiti, hello, you're saying hello. Yes, I hope you're doing great. Hello, Rocky. Joseph, you're asking how is Kampala? Kampala is fine, thank you. Just squad, you're saying Jumbo. Yes, Jumbo, just squad. How are you doing? I haven't seen you just squad in a while. I hope everything is doing awesome and you're doing great. Also Apollo. I have not seen Apollo also. It's been a minute since I saw Apollo. I hope you guys are doing awesome. So will gold come in bearish? Will come in bearish to fill the gap? Yes, definitely. I'm expecting gold to potentially fill that gap. Okay. However, now I don't expect the conflict to escalate in Israel and Hamas. This conflict dates back quite some time. Okay, it's not a new conflict. These people have been in battle for a long time, but it majorly started when Israel was designated as a state. That was after World War II in around 1948. So ever since that happened, there has been endless battle there. In some of those states, we have Gaza, then we have East Jerusalem, so some of those areas there. And the battle has been because that land on which Israel was actually taken from the Palestinians. That's why there has been that battle. So it's not a new battle, and that's why we're not seeing gold going under intense buying. Okay, if gold was undergoing intense buying, then it would simply be because it's a fresh conflict. But if it's a conflict again that has been there before, and it's also under control, and it's not also spreading to the other regions like Europe, it's staying within Middle East, then definitely we can expect there to be some kind of calm. Redemptor Machari, you're saying Jumbo. Yes, Jumbo. Joseph Gichari, if the PPI comes lower, what does this mean for equities? So just to repeat the PPIs again, keep in mind that the PPI is essentially expected to decline. That is why PPI is expected to decline, CPI is expected to decline. So on those two fronts, if we are expecting PPI to decline, CPI to decline, then that is already now fundamentally a dollar bearish one. Okay, so even now the market is forward looking, so it will start moving before the news. So I'm sure most of you have had something that we call buy the rumor, sell the news. Okay, that's what's happening with the risk on assets. So they're essentially buying the rumor and expecting that when the data comes out, okay, then we can expect there to be some kind of now change with sentiment. So if PPI comes in below 0.3%, definitely we're going to see the dollar undergoing intense selling. We could see gold buying, we could see a pound going under some bit of buying. That's a pound dollar. Same thing also for the indices. Okay. But if I'm to speak about the tech stocks, keep in mind that it's the earnings calendar. I've just spoken about that, but also keep also in mind that we're also having some bit of bullishness coming in for the tech stocks. Okay. Since it's a bullish year, and especially because this year is a year of AI exuberance, if I'm to put it that way. AI exuberance, meaning a lot of the tech companies are trying to see how they can integrate AI in most of their products. We have seen that recently with Meta, which is the company which upgraded Facebook. It released Ray-Ban glasses, which have AI capabilities, okay, which now really changes the span of things and how things are expecting to go as we move forward. Yeah. Then the next question: where can one get join the morning virtual classes? So the morning virtual classes in Kampala happen between 11 a.m. to 12 p.m. So you can attend the classes. I'm sure there should be a link that's going to be shared. If you're within the contact group with FX Pesa, you'll definitely have that information shared with you. However, we have a WhatsApp group for Kampala where you can actually get that link and you can join us for the morning virtual classes. Then Joseph is saying, no, but kindly share the link for the Zoom morning classes. Okay, so the morning classes, I don't have the link with me here, but I'm sure it's going to be communicated in due course, and then you'll be able to attend those classes for Kampala. Tron, you're saying, have you reviewed gold? Yes, I'm done reviewing gold, and I'm done reviewing gold. So gold, we're expecting it to undergo some bit of buying momentum for now. And of course, that could potentially continue, especially if we expect if the PPI comes in lower, then gold definitely will undergo some buying intensity. But keep in mind that the overall trend is pointing to a bearish one for gold, simply because investors and traders are seeing that there's that kind of better, there's a better return coming in for the US for the US yields compared to gold. Okay, so if as I wind up, I just want to show you quickly something here. This is the US 10-year, okay, the 10-year bond yield. Now I'm going to add this to it. Here. Let me just do this. So this is gold. Okay, so I'm adding gold to the US 10-year. And the reason why I'm doing that is I want to show you guys something. I want to show you that there's actually some kind of... You're most welcome, Joseph. You're most welcome. Yeah, the link will definitely be shared to you, so you'll be able to see it. Okay, so as we wind up, this is the daily. This is the daily for gold and the US 10-year. So what we are seeing here, this is something that we are seeing. We are seeing that the US 10-year is actually up about 42%. Gold is up about 9.32%. Okay. Now, this is from October last year. Now, this is a simple indication that actually gold could undergo a bit of selling intensity simply because there's some kind of a better return for interest bearing, that is on the US 10-year as compared to gold. Okay, and the intense selling we saw last week was could be attributed to this. Okay, we are seeing that shift in sentiment. We are seeing that shift in interest in terms of the assets. Huh? Yeah. So I think with that, I wish you all an amazing day. Yes, Sarah, you're asking, hi, no, but should you expect more classes for beginners? Yes, the classes for beginners happen on Monday, Tuesday and Thursday, and we usually provide that link to you so you can actually join in those classes. So with that, I wish you all an amazing day, and I will see you all next Wednesday. Happy trading, everyone.